Hello and welcome to Ticker Tapes. It's Monday, so that means FAANGs are on the agenda again. Last week was dominated by earnings. Meta Platforms, the owner of Facebook, WhatsApp, and Instagram, got the ball rolling after the close on Wednesday, reporting the company's first ever decline in sales, with revenues falling by 1% over the quarter to $28.8 billion. The company also guided lower for Q3, suggesting that revenues would be in a range between $26 and $28.8 billion, well below the consensus forecast of $30.5 billion. On the bright side, the daily average user numbers on Facebook jumped to 1.97 billion, up 3% year over year. However, that positivity was more than offset by comments from CEO Mark Zuckerberg, who said, "We seem to have entered an economic downturn that will have a broad impact on the digital advertising business. And it's always hard to predict how deep or how long these cycles will be, but I'd say that the situation seems worse than it did a quarter ago." Meta stock traded lower by 12.26% on the week, managing just a single positive session in that time frame, with many brokers cutting their price targets on the weaker outlook for the firm. Amazon reported earnings per share of minus 20 cents compared to Wall Street expectations of a profit of 13 cents. However, the loss included a one-off write-down of $3.9 billion against the company's investment in Rivian Automotive, whose stock is down by 67% year to date. Sales at Amazon during Q2 hit $121.2 billion, more than $2 billion above the street estimates for the quarter. The company said that, despite continued inflationary pressures in fuel, energy, and transportation costs, we're making progress on the more controllable costs we referenced last quarter, particularly improving the productivity of our fulfillment network. We're also seeing revenue accelerate as we continue to make Prime even better for members. As we have come to expect from Amazon, the company continues to invest in the future and said that it will boost spending on data centers and cloud computing engineers. That's hardly surprising when sales at Amazon Web Services rose to $19.73 billion in Q2 compared to $14.81 billion this time last year. The market's reaction to the numbers was mixed, and Amazon traded down by 1.89% in Thursday's session post-earnings. Brokers Piper Sandler raised their target price by $5 to $175, whilst JP Morgan boosted its target to $185. The Jefferies analysts said the stock was attractive at the current levels, circa $122, and rated Amazon as a buy. Apple had the last word on earnings last week when it reported its Q3 numbers. Revenue from services grew to $19.6 billion from $17.49 billion last year. However, revenues from sales of its Mac computers, iPads, and wearables all undershot their 2021 comparatives. That said, iPhone revenues in Q3 hit $40.67 billion, up more than $1 billion from 2021. Apple declared a dividend of 23 cents per share and said that its supply chain constraints were less than it had anticipated and that it was constantly scanning the market for potential acquisitions.